Hello and welcome to the latest episode of MHA's Ask the Expert. My name's Carl Hall. I'm a director at MHA in the Banking and Finance team. I'm delighted to be joined by Carmella Marsh, Head of Corporate Sales and Performance at HSBC. Carmella and I are going to be discussing the current market and how HSBC is working with clients to navigate it. So, Carmella, can you start by telling us who are HSBC?
Thanks, Carl. So HSBC is one of the world's largest banks. We serve over 60 countries and 40 million customers worldwide. For those that don't know, the bank has been going for over 160 years. So hopefully a high street name that most know, but perhaps what will be very interesting to discuss today is more around our appetite and how we've grown and evolved in what's been a very complex financial services market.
Oh, definitely. I mean, the last couple of years, we've seen that certainly from yourselves in our space with your competitors. You're definitely out there now, yeah. So what are your thoughts on the current market and where we sit?
So it's been a very much a complex market and has been a state of complexity for the certainly last decade. In terms of HSBC's current view of GDP, it's actually a market that's done, the UK has done best out of the G7 economies with 0.7% growth. And for Q3, 0.3% growth. So slight downgrading given everything that's been going on in the wider macro economy, but great to see those sort of grass shoots still there and still, thriving, probably slightly ambitious, but certainly surviving and actually showing those grassroots of opportunity that are there. In terms of the forecast then for sort of FY25, the bank has actually increased its prediction from what was 1% to 1.5% GDP growth, and the forecast for 26, 1.2%. So, this is a positive, output given where we started at the beginning of the year. The underlying picture, though, isn't all that rosy. There are, less impressive growths for GDP, ex-government and per capita, with Q3 and Q4 predicted to grow at only 0.2%. So it's definitely shrinking as we see, but still more positive than we expected or anticipated at the start of this year. What's driving that? Inflation, still very sticky at 3%. The Bank of England very much signalling a pause in any easing, certainly we think until April of next year.
I agree. I think base rate at 4% is the new norm. If you may see it, in my opinion, you may see it drop slightly, but you're talking maybe 3.75, and then that's that. You should see that for the next couple of years, unless something dramatic happens in the wider market, of course.
Absolutely. And I think, our house view is very much of that, kind of the goal endpoint, sort of 3%, but really we're talking sort of 2027. If all things continue to fall in the way they are, with inflation slowly coming down, with, stability in the job market, with the housing market slowing, and of course fiscal easing, which we're expecting to see some form of reforms or changes in the budget this autumn, depending on the scope and scale of that, could obviously knock that on further.
I agree. I mean, we've seen some snippets of the last few days from the government in where the budget may sit, which is obviously we've already seen slumps in the market now and movements in the market because of some of those comments as well. Again, if you look at the average, I think over the last 100 or so years of the Bank of England base rate, it is around 5% if you average it out. So I think that peak from COVID, where we saw a huge increase of 18 consecutive increases to over 5%, and now bringing it down to 4% over the recent times, I think we are where we should be. But who knows?
Very much so. But I think, the main sentiment, certainly from what we've seen from our client behaviours, is that they are very resilient, and that they are using an array of options to manage, kind of cash and navigate an uncertain market in what is a continual state of change, both from a sort of internal politics and political landscape through to those macro pressures as well.
No, I agree. COVID, from our clients, we saw, and your clients, I suspect, may be the same. They held a lot of cash because obviously the costs, whilst some industries weren't earning, they weren't spending as much either. So So they were sat on a bit of cash, and then obviously from C bills and B bills as well. But certainly in the last 12 months, I think that cash has been used elsewhere now, it's starting to deplete, and I've certainly felt that lending has increased in maybe the last 6 or so months, and certainly appetite from lenders I've seen has increased as well, namely yourselves.
Absolutely, and I think in part that's very much also driven by a higher interest environment where as interest rates are also coming down, banks are also and lenders are also kind of needing to ensure that they're lending in a way to continue sustainable growth for each of those institutions.
I agree. How then can you assist with sort of your clients, or assist our clients and your clients with products and services from HSBC? And I appreciate that's a loaded question because there are multiple sectors and multiple facets, but...
Absolutely. So from HSBC's perspective, we're a full service, full spectrum, full life cycle organisation to support businesses from startup through to very mature corporate. So you're absolutely right. There is a whole raft of solutions packed into what we can offer clients, whether it be, from that startup first sort of ability to open an overdraft to get things going through to very complex structured working capital solutions for growth or event-driven transactions. I think the fundamental principle, particularly when you're talking to either HSBC or a tier one mainstream bank, is to present what the ask is, what is it that business is looking to do, and then be open to ideas and suggestions and not just be fixated on one particular solution.
I couldn't agree more. Obviously, you'll know my background, but it's sort of 20 years in the industry as well, and I walked the path as an RMRD at Lloyd's for many of those years. So for me, when I was speaking to my clients, it was always a case of, well, let's look at the whole picture. Because again, you mentioned yourself, client may come in and say, well, I need an overdraft. Well, no, you might not need an overdraft. You might, but you might also need an invoice finance or an asset finance or a GGS loan or whatever that may be to give the best experience to the client. I certainly see that from HSBC with the involvement I've had with yourself, your colleagues.
It's good to hear. I think, ideas and solutions are absolutely at the heart of everything that we do. We're a relationship-driven bank. And of course, we want to be able to present the best solutions and outcomes that put the client at the center of that, whether that be through, kind of an intermediary-led relationship to that customer, or it's an existing customer that we've banked for many, many years. It's absolutely about looking at what all the options are and allowing the customer ultimately choice in how they take that forward.
I agree. It's that informed choice position, isn't it, as opposed to an order taker, to make sure. Because again, a lot of the clients think they know what's available to them, but they don't know what they don't know a lot of the time.
Exactly. And I think, both product solutions, appetite in, one institution to another can change so wildly that if you aren't aware, you could be missing out on opportunity that actually, we do have appetite to do. I think, a lot of individuals that I've spoken to in the last 7 months sometimes are quite surprised that HSBC's got such a high appetite for cash-driven, event-driven transactions that require cash flow lending. And actually that's, a kind of core element of what we do, not just in terms of providing, structured trade or asset finance or sort of term loans, but actually, putting funds into a business to help them achieve a certain outcome or solution.
Again, I couldn't agree more. I mean, we've had some recent experience in some transactions ourselves, and again, there's a live case right now where, again, I wrote a review for the individual and yourself involved with that transaction because it was market leading in terms of the service that you've offered the client and the product that's been offered to the client compared to the competitors. And whilst I had tier one options on the table against yourselves, you were by far the best solution for the client, and the service provider to said client was merited in my response. So thank you. It's
really good to hear. And actually, I think, the phrase market leading is something we really aspire to be across a lot of, the segments, propositions and offerings that we have. I think, we talk about HSBC, being an agile and adaptable organization, which for a 160-year-old organization sometimes doesn't quite feel like the two should go together. But, we're very much in a world where we need to be adaptable to compete with challenger banks who absolutely have a place in the market. But actually, we need to make sure that we are in ourselves are being innovative, adaptable, and ensuring that our solutions are fit for the market and fit for the future. And so market leading is definitely something we strive to do across a number of products, whether that be through product innovation, whether that be through, changing and flexing credit scope. You take the dental policy that we've, recently updated, which again is very much a market leading proposition, through to being recognized as, the world's best trade bank. We can only be the best world's trade finance bank by ensuring that the products that we have there are truly market leading in what we deliver.
No, I think that's a good point. It's not on here either as a question, so we'll do it organically. But in terms of the appetite in different sectors, you mentioned dental there, for example, in terms of healthcare, and I think it's clear clients tend to think that all banks are the same, and if it's a tier one bank, whether that be HSBC or one of your competitors, then they think, well, it doesn't matter, I'll go speak to any one of them and they'll give me the same answer. Whereas banks dip in and dip out of different sectors, different appetites, depending on how leveraged or highly leveraged you are in a certain space, or if you've had a bad experience in one of those sectors, or indeed the market itself has moved. And again, banks do change, but you don't all swim in the same circles. The majority of the time you do, but a lot of the times you'll see, like say HSBC will be specific in a healthcare sector that maybe a Lloyds or a Barclays aren't, or likewise you might like a hospitality sector. No one does, but the others don't. And again, that live case you mentioned there, I certainly saw that where, again, of the sort of top 4 tier 1 banks, 2 weren't interested in the deal at all, and 2 were, which was yourselves and NatWest. And then there's some challenges that came in with very competitive pricing and products. But I suppose we touched on it. So if you're happy to, we'll continue to talk about sector appetites and where HSBC sits currently, or what types of transactions you want to see and want to transact on, albeit caveated that will change from time to time because it's an organic policy, depending on what's happening in the wider market, if you're happy.
Yeah, absolutely. I'm probably going to give you a fairly political answer, only in that, there are very few sectors that we would kind of completely shy away from. And, without sort of, sitting here and going through the HSBC credit policy, which would be a very dull conversation to have.
And we'll change by the time we get to the end of it.
Yeah. Really for us, it's about reputation. So, industries that have a high reputational risk or are very damaging, we would clearly, they're probably not for us. That's an obvious starting point. But when you then talk about more broadly which sectors, what sectors, we will look at predominantly most sectors in the economy. There are other sectors that are higher risk. You take construction, for example, which is very volatile and can have some significant impacts from its contractual nature. It's not to say that we won't look at businesses in this space, but you look for the businesses that are of the stronger nature. There's extra due diligence that goes into that, review and assessment of the viability of the business. So, we're looking for really strong, credible businesses across the board, clearly, but those in higher risk sectors that just require that extra level of diligence. There are clearly sectors that are, kind of growth sectors for the economy. And again, these are sectors that we're really keen. Healthcare, you touched on, green tech. Clearly, when you think about the direction of travel, AI and technology, these are all businesses that, not just us, I'm sure most of the sort of, tier 1 and other challenges would love to go out and support because they clearly have a place in the future and are doing very, very well in the economy. But, fundamentally for us, it's about assessing the business rigorously, looking at their financial, both track record, but their financial forecast. Where are they going? What's involved in that? And making the assessment then of the viability and the affordability of what's being asked.
Oh, that is really good. And it's good to see sort of that old-fashioned traditional banking where you've got boots on the ground that will review an application, will look at why they should do the deal as opposed to why they shouldn't. And again, that's certainly my career path, and I talk of sort of walking the factory floor and spending time with a client to see how you can come to a solution that is fair and reasonable for all parties, including the lender. So as opposed to a tick box computer says no. So no, it's great. And again, I can concur that HSBC are definitely doing that, where in some instances they've been frustrated that they can't get the deal because they really want to help the client, which is definitely seen from our eyes, which is great to see.
Good.
So tell me, typically, what does the process look like from a service perspective to a client, from sort of nose to tail?
Yeah. No, it won't surprise you. Depending on the complexity of that customer, the size of the customer, the process might change slightly, but fundamentally and principally, you'll have an individual relationship manager or director assessing that business, looking at the financials, the detail that goes into that credit application, which would then be reviewed by a credit supervisor and approver. So, that process typically can take, anything from, a few days or weeks, depending on, again, the speed and process that's involved in it. And then once that product, that pack is approved, again, depending on the products and solutions that are being presented to that customer, there may be valuations, there may be additional surveys or audits that are required, or potentially due diligence that's required from third parties to form part of that credit approval process. And then you're into the sort of security documentation and execution. So it is a relatively straightforward process. It's certainly well trodden. And from a, business switching from one bank to another, an exceptionally well trodden path where we, hold the hand of that customer throughout that journey.
Yeah, no, I can concur, and the relationship that I have with the RD from that point and the client as well, the communication is key, because whilst the client will always say, "Oh, I'm in no rush for the money," as soon as it's been sanctioned, the next question is, "When can I have it?" Yeah, and that's human nature. It doesn't matter whether as soon as you agree to buy something, or as soon as you agree to want it, you want it there and then, don't you? So, but no, communication is key. And I always like to leave a bit of fat in that time. So if an RD or an RM or whatever tells me 2 weeks, I may say 3 to the client. But I think...
Human nature factor.
Of course it is, yeah. But from what I've seen with yourselves and others, to be fair, is that communication is really, really clear and concise to the client. We're not asking for further information upon further information. It's a lot of the time, we know what we want and why we want it, and then we can move forward. So, but you're right, that it could be an audit, questions could come out in audit, there could be FDD, there could be security concerns or issues that come from a survey. So they will always add time, but that's standard with any transaction.
Yeah, absolutely.
So obviously HSBC are an international bank and well-versed in and well-trodden in that field, but see, you focus on SME here at UK, homegrown, owner-managed businesses as well, and it's fair to say that you'll transact as little as sort of £5,000-10,000 in a single product, all the way up to multi-million-pound, multifaceted corporate transactions. Do you want to put anything else onto that?
Yeah, you're absolutely right. I mean, most people will absolutely identify HSBC as being a true global bank, that we're really supportive of businesses that are looking to either expand overseas or are trading internationally. And that is absolutely true. We it's our sweet spot, and we're really well placed to support any business that's either already internationally trading or looking to grow internationally. But actually, we do a phenomenal job of supporting businesses domestically in the UK. We've got a really strong appetite for businesses that don't have international presence or a desire to trade internationally. And certainly with some of the products that we offer, even in our global trade solutions kit bag, they still support businesses that are buying purely on a domestic basis with trade loans, which a lot of people aren't necessarily familiar with. So we do have a huge appetite to support both internationally and domestically.
No, that's good. I mean, we've seen it, or I've seen it certainly from the Baker Tilly international piece, that we've had international clients that are looking to break into the UK as well. So you've transacted on 2 of those for me in the last 12 months, where we've had, again, large businesses, multifaceted across sort of Switzerland, Belgium, France, and then coming into the UK. One was Ireland and Switzerland as well. So yeah, you were the perfect fit for them, because they still want that international piece, because that's where their bread and butter is, that's where they've been formed, but breaking into that UK space. But likewise, our sort of general SME owner-managed clients, we've seen you at the forefront of supporting those as well. Well, that's all we've got time for today. Thanks again, Carmella, for taking the time out of your day to answer some of our questions here.
An absolute pleasure. Thank you so much for inviting me.
No problem. Be sure to check out HSBC's website at the link on screen and learn more about what we've discussed today. Also, reach out to us at mha.co.uk if you'd like to learn more about our services. Stay tuned for our next episode. Thank you.